And basically, this one is also known as amalgamation. Then number 3, we also define what is absorption. So to start with the external reconstruction, basically this whereby a company which has been making losses or which has been going through financial problems or through financial distress will be liquidated, and basically its operation or its business, assets and liabilities taken by a new company which will be formed for that purpose. So here, the company which has been going through financial problems, assuming it is company X, this company will be liquidated, and
December 2024. Question 4B. So 4B, we read it. I noticed that this question was not captured. Even the analysis was not captured in the recording. So you're going to go through the analysis again because it was not captured. If you look at the recording, were you able to note that? The analysis for this question was not recorded. Sheila, were you able to notice that? Somebody was able to notice the analysis for this question was not recorded. So just go through it very fast. So we're being told that 𝐎𝐿𝐶, we are being told that 𝐎𝐿𝐶 PLC is a company registered for value-added tax, that is VAT purpose, buys and sells goods locally and in foreign markets. So the following transactions were extracted from the books of the company We say for the month of September 2024. Number one, that is September 2nd, purchase goods from local market for 103 to 40. So when you're told purchase goods from a local market for 103 to 40, what is that? Very fast so that we do it. What is that? That is an input VAT. So the next, we're being told that imported goods, we are being told that imported goods with a landed cost of 340, excluding what we call the import duty and value added tax, excluding what we call the import duty and value added tax. So the import duty was 25%. So we can have our first working on that. First working on that, we just say CFI, that was 340. So we have import duty, importer duty, and the CFI, input duty and the CFI, that should be, so this is 100%, this should be 100%, so the two should be 125. So we have 125 over 100 times 340. So what is the figure? What is the figure? What is our figure for that? That is 425. 425. So that is 425. 425. Then we move to the next, we're being told that sold goods on local market. Sold goods on local market. For shillings 180, 960. Sold goods in the local market. For shillings 180, 160,000. So what is that? That is an output fee, VAT. So then September 8th, we are told that paid audit fee of shillings, paid what we call audit fee of shillings 17,400 in respect to establishing what we call internal audit control. In respect of establishing what we call internal audit control, that should be an input VAT. Miriam, are we together? Are we together, Lenovo? Freda, are we together? If you're together, you respond with a yes. If we are together, you also respond with a yes. Thank you, Katar. Thank you, Freda. So then the next, we've been told that that is September 10th. September 10th. So we've been told that goods valued for shillings 20,880 were returned to the business. Goods valued for 20,880 were returned to the business by a credit customer, and a credit note issued immediately. And a credit note issued immediately. And you're being told, and the credit note issued immediately. What is that? And does it affect input or output? What is that? It affects output. How does it affect output? T and Mary, how does it affect the output? How does it affect the output? How does it affect what we call the output? It reduces what we call the output. So then we're being told next, that is September 12th, paid for catering expenses, and you're being told that shillings 26,860. Paid for catering expenses, that is shillings 20,880. 680, sorry, in respect to a restaurant facility managed by another firm. So what did you say about catering services? Those are non-deductible input fee, non-deductible input VAT. So then we move to the next, we're being told that sold goods, that is September 14th, we're being told that sold goods to a firm operating in Egypt. Sold goods to a firm operating in Egypt for shillings 480. Sold goods to firm that is operating in Egypt for shillings for shillings 480. For shillings 480. What is that? So that is an export. Exports are zero rated. So remember that is an export, and exports are zero rated. So that is an export, and we understand that that export is zero rated. So then you move to the next. We're being told that received what we call a debit note of 62,640 in respect to erroneous invoice received earlier. So being told that pay received a debit note for shilling 62,640 in respect to erroneous invoice received earlier. So what is that? And what does it affect? That is a debit note received. And it affects what? Input, which is purchases. The examiner tells us September 18, exported goods to Malawi. Exported goods to Malawi. We have exported goods to Malawi, valued at shillings 240. When you say exported goods to Malawi, valued at shillings 240, how do you treat it? Valued at shillings 240. That is an export, and that is zero rated. So the next, that is September 20th, the examiner tells us that purchased computers and computer softwares for shillings 208,800 for use in business. For shillings 208,800 for use in business. How do you do that? That is an input. Input, for those who are not in class, input is VAT on purchases and expenses. So then the next we say supplied and processed. Supplied what we call and processed fruits and milk to Starlight Enterprise for shillings 170. So being told that the supplied what we call and processed fruits and milk to Starlight Enterprise for shillings 170. What is that? Remember that is sales, but that sales is exempt. That is exempt. That, remember that is exempt. Together. Remember that is exempt. So then the examiner tells us that is September 24th, sold goods to Lucky Enterprise. You're being told sold goods to Lucky Enterprise for shillings 64,960. For shillings 64,960. For shillings 64,960. What is that? Sold goods to Lucky Enterprise for shillings 64,960. Aziz, how do you treat that? Aziz and Ann and FJ, how do you treat that? For shillings, how do you treat that? That is an output. That is output. Thank you. So then you're being told that purchased oil and fuel. You're told that purchased oil and fuel of shillings 9,280. Of shillings 9,280 for a generator used in business. For a generator, we say used in business. For a generator that was used in business. How do you treat that? For a generator that was used in business. So that is input. At what rate? Remember, as of 30th, that is June 2023, oil and fuel changed from 8 to 16 to 16 at the rate of 16. I'm saying as of 30th, are we together? As of 30th, as of 30th, that is June 2023, oil changed from 8 to 16. Perfect. Thank you, Aziz. Noted that. They say a customer owing a business goods worth 20,300 was declared bankrupt and the bad debt was written off. And the bad debt was written off. How do you do that? And the bad debt was written off. And the bad debt was written off. What did you say about that? What did you say that? That basically reduces what's called the output. Output, that will reduce the output. Then lastly, we have what's called sold goods exempt from VAT. So being told that sold goods exempt from VAT for shillings 250,000. What is that? Sold goods exempt from VAT, shillings 250,000. That touches on output, but that is exempt. So then the examiner tells us all transactions, examiner tells us that all transactions are inclusive of value-added tax, that is VAT, where applicable, VAT, where applicable, unless otherwise stated. So the end of that. Then required, before we go to required, is there anybody with a question? Is there anybody with a question? Is there anybody with a question? Kuna mtu ana swali. Is there anybody with a question? Mwalimu, if the question, June 20? As this says, let me. For tax, this is real time. When changes are effected, what you do is real time altogether. If it's a day before 30th, then that should be 8%. Otherwise, from 30th, that is July, that should be 16%, 16% altogether. As per day. So anything less than 30th, that should be 8%, 8% together. 8%, 8%. 8%, 8%. And I want you to also note that tax changes a lot. Have you noted that tax changes a lot? What we're learning today, the number of things that will not apply. What you're learning today in the next 2 years will have different rates, or there will be a lot of changes altogether. For tax, it changes a lot. We can have something in operation, somebody goes to court, and the next day it doesn't exist. Have you ever noted that? We are applying something, and the next day it no longer exists. Is it true for tax? That is tax for you. Things will keep on changing. Believe me, what you're learning today, there will be changes to it. Is it true as is and the rest of the team? Perfect, if that is true. So then we move to the next. It's all calculate the value added tax. Calculate the value added tax payable or refundable. Calculate the value added tax payable or refundable to 𝐎𝐲 PLC for the month of September. For the month of September. We did say that in questions where we have exempt, and we are not told that those exempt purchases that were sold were as exempt could not be traced. We are not told whether they could be traced. Which method did you say we are going to use in this particular question? Which method did you say we are going to use in this particular question? Are we going to use the direct method where we are going to restrict? So we proceed. We can start with the input for the start. We start with the input. We can start with input. So we start with the input. Input. So we have item. We can have item. You can also include the date if you want. You have the date, the amount. Then you have the VAT rate. Then we have the VAT. So we start with the input for this question. We start with the input. So the first one on the input, we say purchases. We have purchase, local purchase, local purchase. What is the figure for the local purchase? The figure is 103 to 40. Which rate are we using? And why are we using that rate? Which rate are we using and why are we going to apply that rate? 16 over 116. Frida, I think you've forgotten 16 over 116. We are not getting self-exclusive. Yes, I'm increasing the fonts. Let me repeat it again. Let me just increase. Local. I hope now it's okay, my good brother. So 103 103 to 40. The rate is 16 over 116. And why are we using 16 over 116? 116 over 16 over 116? Why are we using that? So that others can also understand. Because we've been told all transactions are inclusive. All transactions are inclusive of value-added tax. So what do we have? All transactions are inclusive of value-added tax. So we have 14, that is 14 to 40, 14 to 40. Then we proceed to the next, we have what we call import. What is the value of import? The working that you did. The value for the import from the working, 425. What do you say about import? Imports are exclusive. So that's we use 16 over 100. Even if the question is inclusive, imports are normally exclusive. So what is the value of that? Provide that for me. 16 over 100, what do you have? So that should be 68. 68. Then we go to audit fee paid. We have next is audit fee. So for audit fee, we have a figure of 17,400. We have 16 over 116. So what is the VAT on audit fee? The VAT on audit fee. The VAT on audit fee. Meanwhile, as you make the entries, the scores you're getting, as you make right entries, you're scoring marks. So then we'll move to the next, go to catering. Catering is a non-deductible catering services. So this is non-deductible. This is non-deductible. That is non-deductible input VAT. So then we proceed to the next. We have debit not received. Debit not received. We have the debit not received. And the figure for the debit not received is 62,640. So that is 16 over 116. What is the VAT on debit not received? What is the debit not? Debit not received, the VAT on debit not received, we have it as 8640, 8640. Then we proceed to the next, we have computer and computer softwares. The next purchase or expense is computer and what we call computer softwares. And computer softwares. Computer and computer softwares, we have 208,800. So that should be 16 over 116. 16 over 116. So what is that? I'm going back there. 14th is output. Sheila, Lenovo, I'm on input. Input is purchases and expense. 14th, that should be on sales. Sawa. So we have 28. Somebody says 28,800. Together, 28,800. So then we proceed to the next. We have oil and fuel. We have oil and what we call fuel. Oil and fuel. We have 92,80. So times 16 over 116. So that is 12. We have it as 12, 18. So then I hope there's no input. There's no input. So what is the total input? Total input. Total input VAT. So what is the total input VAT? What is the total input VAT? Check date 10. So that affects sales. Goods valued at 20. Good valued at 20,000 were returned to the business by credit customer. That affects the sales. Okay. The 10 that affects the sales, return inwards. Wait again, that is return inwards. And the credit note was issued. Okay. Credit note issued affects sales. Remember, when you're doing the restriction, we separate input and output. Okay, are you sorted? If that is sorted, you respond with a yes. Okay, is that sorted? So that should be 123. We have 123, 316. Perfect. So then you go to the output. Before we do the restriction, we get the output VAT. Is there anything on input that we've not given? So we have everything on input. Is that correct? Everything on input is sorted. We respond with a yes if that is sorted. Perfect. So I go to the sales. We have the first one. We have the items. Can you see here? Items. We have amount. We have the VAT rate. And then we have the VAT. Are you able to see the board perfectly well at that point? I hope you can. So then we have what we call local sales. What we call local sales. So the local sales, we had a figure of 180, 960. The VAT rate is 16 over 116. So what is that? The VAT rate is, so that should be 24. We have it as 24, 960. Perfect. So then we move to the next, you're being told the next is credit note issued. So we have what's called the credit note issued. So what we call the credit note issued on goods that were returned. So the credit note issued, that was 2880 times 16 over 116, and that will less. So what do you have? That figure that you're lessing. What is the figure that we are lessing? The figure that we're lessing. Provide the figure that you're lessing. 2880. Is it right? What has been given? Which one is right? Is it Sheila or 28? That should be 2880. Then you have the next. The next is export. Export. We have it Egypt. Egypt. Export Egypt. That should be 480. So that is zero rated. So this should be zero. You must write a zero, not a dash. Zero and a dash are two different things. The dash means exempt. So we move to the next, we have what's called export Malawi. We have export, and we understand that goes to Malawi. So Malawi is 240. So we have 0. 240, then we have 0. Then we move to the next, we have what's called supply of unprocessed. So we have the unprocessed fruits and milk. Remember, these are exempt. These are exempt, the figure 170. Though there's no entry for this, but that is exempt. Everybody together with me? Are you together with me? If you're together with me, give me a yes. If we are together, then you give me a yes. Perfect if you're together. So then we proceed to the next. We have what we call Lucky Enterprise. We have what we call Lucky, another cell, Lucky Enterprise. So Lucky Enterprise, we have a figure of 69, 64, 960. And then we have a 16 over 116. What is that output VAT? What is the VAT for Lucky? Lucky, what is the figure? Lucky, we have 89. We have a figure of 8960, that is for Lucky. 8960 for Lucky. So then next we have, that was a customer owing the business goods worth 20,300 was declared bankrupt and the debt was immediately written off. How did you do that? What did you say? We said bad debt. That should be bad debt. So we have the budget, 20,000. So what do you have? So what is the figure for that? It is 2,800. So say 2,800. So then we have lastly, so there's no marking for that. We have what we call exempt cells. So exempt cells, we head to 50. We have a dash and dash. So then we have what we call total output VAT. What is the total output VAT? What is the total output VAT? Give me the total output VAT. So give me what I call the total output VAT. So somebody has it as 28 to 40. So the marking point is the entries, those entries. The marking point should be the entries. So in this case, we said that we restrict because we cannot track, we cannot basically track sales. We cannot track purchases that were sold as exempt. So we do what? We restrict altogether. We basically restrict altogether. We basically restrict altogether. So when you're restricting, we're saying taxable supplies, taxable supplies over what we call the total supplies times what we call them the total input VAT times the total input VAT times the total input VAT. Allow me to adjust the camera. Allow me to adjust our camera. So that should be okay. So we're saying when we're restricting, number one, when restricting, taxable supply, we understand is zero rate, 0 plus standard rate. Are we together? When you talk about taxable supply, total supplies, that is standard rate plus the zero rate plus what you call exempt. Is that noted at the back of our mind? When you talk about taxable supplies, that is the zero rate plus the standard rate. And when you talk about the total supplies, that should be the standard rate plus zero rate plus exempt. Together, team. If you're together, we respond with yes. Kindly give me a yes if you're together. While we're doing this, as an NB, while we're doing this, we are basically saying that the standard rate cells, we're saying that the standard rate cells, we say should be exclusive. It should be exclusive of what we call VAT. While you're doing that, we're saying that the standard rate cells should basically be exclusive of what we call AT. While we're doing that, we're basically saying that the standard rate cells should basically be exclusive of VAT. Are they exclusive of VAT when you talk about the standard rate cells? Is it exclusive of VAT? Is it exclusive of VAT? No. So where are the standard rate cells? Local cells, this is standard rate at 16, standard rate. Another standard rate cells, Ningapi, we have it here, standard rate altogether. So it's affected by credit note and it's affected by bad debt. So what is the total standard rate cells? So the total standard rate cells should be a figure of 189.60 plus a figure of what you have as 69.60. What is the total standard rate cells? What is the total standard rate cells when you add those two? When you add those two, what is the total standard rate cells? When you add those two, what is the total standard rate cells? What is the total standard rate cells? What should be the total standard rate cells? Total standard rate cells. So that we have it as 245. Somebody gets me 245,920. 245,920. And we adjust it. We adjust this figure, 245,920. We adjust by lessing the credit note, which is 20,880. We adjust it by lessing 2,300. So when you adjust this, what is the net figure? So what should be the net figure when you adjust those two? When we adjust those two, what should be the figure? When you adjust those two, what is the figure? When you adjust that, what is the figure? So we have 204, 2048, and somebody just to confirm that. Somebody to confirm what T has done and what, somebody to confirm what T has done. Which is which? Is it 740? 740. So that should be, we have it as 740. So we're basically saying that this figure, 204, 740, is basically 116%, because that's inclusive. Yes, equals to 116, 116. What about the figure exclusive of VAT, which is 100%? So 100% would be 100 over 116 times 204, 740. So what is the figure exclusive of VAT? The figure exclusive of VAT equals to that. So what is that figure? So we have 176. We have a figure of 176,500. So we can get the taxable supplies. So taxable supplies should be the standard rate, which we have 176. Zero rate nigani nagani. Remember, this is zero rate. So we have for 80,000. And the next zero rate is 240. So this is zero rate. Zero rate. This is also zero rate. So what is the total taxable supply? 240. Taxable supplies. What is the figure for the taxable supplies? The figure for the taxable supply. Give me the figure for the taxable supply. Yes, plus this. What do you have? Plus that, what do you have? So that is, we have a figure of 896,500. Can I wrap this part in the middle? The input? Can I wrap the input? Perfect. So then we get the total supplies. We get the total supplies. So we get the total supplies. So we understand that the total supplies, we get the total supplies. Total supplies should now be standard rate, 0 and exempt. So standard rate we know is 176,500 plus 720 plus 720. Exempt, which is exempt? When you pick that question, exempt is which figure? Plus exempt. Exempt, we have 250. But you also have plus 170. So what is the total taxable supply? 250 plus 170. So what is the total supplies? What we call the total supplies. So what is the figure for the total supplies? So we have it as 13,16,500. So we can restrict. We get to now what we call deductible. Deductible or restricted input VAT. Input VAT. So where we say the taxable supply, which is 896,500 over 1,316,500 times what is the total input VAT that we wrapped here? What is the total input VAT that we wrapped? Total input VAT. Give me the total input VAT. So that is 123, 360. So what is the deductible? Give me the deductible input VAT. For 80 plus 240, T. For 80 plus 0 rated, for 80 plus 240. T. Where does 720 come from? The first 0 rated to Egypt was for 80, then 240 to Malawi. So that's where we get 720. So what are we getting as deductible input VAT? Are we getting 84? Are we getting that? 84? Perfect. So then we get the VAT payable, so what we call refundable. So we have output is 28 to 40 minus 84,005. So this is VAT refund. VAT refund. What is the refund? What is the VAT refund? What is the VAT refund? Get me the VAT refund. 10. How many entries did you have on those input? Input plus that? 1, 2, 3, 4, 5. Input tulikuwa na ngapi? Yes. Input we had about 7. So any 10 times 1, that should give us the answer. Any 10 times 1. So do you see that this question is doable? Is this question doable? Yes. I want to pick a small question that will be able to do this because I want to discuss. I want particularly to discuss that, and then we go to the tax investigation. I want to try and discuss the remaining part, but I want to give a small question before we go to discussing what is remaining in the handout. Together, team, I want to do a small question. I think we should be able to do that question. Can we? Who has a question? Nani and Aswali. So we can pick on a small question. Then we discuss the handout. That's a smaller question. We discuss the handout. We'll pick a smaller question. We'll pick a smaller question. Some of the small questions. So check for me which number. August 22. I know it's a smaller question. August Ambuche, are you in class today? Gilbert, are you in class? So August, check a question in August. That is August 22. And tell me which number is that? August 2022. I know it's a smaller question. We do that smaller question as the third. That smaller question as the third. As the third. That smaller question as the third. So which number is the particular question? Question 4B. So all of us to open that question. All of us to open that question. Are we there, all of us? As Mwalimu is opening his question. Are we there? Perfect. So we can do that. So we have it there. So we're being told that Zawadi has a sheet. Is this Zawadi has a sheet? Zawadi has a sheet. Is it that? Is it that? So being told provision of service, before or after provision of service. The following information is provided regarding firm's transaction for the month of October, regarding what we call the firm's transaction for the month of October, November, and December. So number one is audit for XL supermarket. So the value of service. The value of service is basically, value of service is 700,000. And the service provision date is 20. Service provision date is 25th October 2021. Then the payment date should be 5th November 2021. Are we able to see that? That is perfect. So then the next thing to the training to Kyle Security. The figure is 3rd November 2021, and you say not yet paid. Not yet paid. 3rd November, and you're being told not yet paid. Not yet paid. So then we have next is accountancy. Accountancy. We have what we call Watoto. We have what we call Watoto. We have what we call Watoto. Accountancy for Watoto Children's Home. The figure is 600,000. The figure is 600,000. That is for December. That was provision date is provision date. That is 5th December 2021. And payment date was 20th November 2021. Is that noted? Is that noted? So what do you think this question wants to test on learners? What do you think this question wants to test on you? Because when I look at that information, what is this question trying to test? Which concept does it want to test when you look at this particular question? The concept of the tax form, as is you have it. It basically wants to test the concept of the tax point altogether. So tax point is basically, for tax point, is basically as is. When is the tax point? When is the tax point? When services are rendered, or payment is done only, or payment is done partially or only. That should be the tax point altogether. So the next we have debt collection services. To Zuela, the figure is 820. That is 9th November. And payment is done. And payment is done. Yes, the earlier when the invoice is issued or payment is done. Perfect. So debt collection to services Zuela, the figure is 820. That was the service provision was 9th of November. And payment date is 30th September. I hope you mark those dates. So then we have strategic planning. Strategic planning. We have development. Strategic plan development. Basel. The figure is 2,115,000. The service date is 10th November 2021. And you're told not yet paid. So then you're being told that management consultancy. Look at the management consultancy. 𝐍𝐋 investment. The figure is 1,440,000. The service provision date is 13th November 2021. 40% was paid on 13th November. 40% of that amount was basically paid on 13th November 2021. Then you have what we call internal review. Next is what we call the internal review. Internal control review, Lemma Limited. The figure is 960. The service provision date is 18th November 2021. So 10% paid on October. 10% was actually paid on October. 10% was actually paid on October. 10% was basically paid on October 7th, 2021. Then you have the next, what they call financial consultancy to W Limited. Financial consultancy to W Limited. The figure is 1.2 million. The service provision date is 20th. The service provision date is 20th November. The payment was done on 1st December 2021 together. Up to that point, are we together? I just want you to mark those dates. Just mark those dates. The key thing is just to mark those dates. So then the next we're being told the 𝐍𝐋 investment. We're being told 𝐍𝐋 investment. 𝐍𝐋 investment. We say it was declared bankrupt. 𝐍𝐋 investment was declared bankrupt on 30th November 2021. If 𝐍𝐋 investment was declared bankrupt on 30th November 2021, what happens to 𝐍𝐋? If it was declared, remember they're not paid only, but they paid partially. So what happens if it's declared bankrupt by 30th? What happens if they're declared bankrupt? What happens? That becomes what's called a bad debt. That becomes a bad debt. So then you're being told that on 5th November 2021, Zawadi Associate renewed its National Industrial Training License of 30, National Industrial Training License of 30,000, and paid a legal fee of 360 to follow up on clients who are not paying as per the agreed dates. Those two things, what do they touch on? And Aziz, Chengo, Miriam, what do they touch on? Those two things, what do they touch on? Those two things, they touch on input. Those two things basically touch on input. So then we move to the next, paid electricity. We say electricity paid on November. Electricity paid on November 2021 was 270,000, out of which 100,000 was payment for outstanding. Out of which 100,000 was payment for outstanding bill of October 2021. 100,000 was payment for outstanding bill of 100,000, over 100,000 for payment of outstanding bill of October, and 20,000 was in respect to additional deposits as demanded by the power company. Have you marked those two? Have you marked those two? Have you marked those two? Have you noted those two things? Do we claim VAT on electricity? That is the question. Do we claim, is there an input VAT on electricity? We respond, yes. But mark, as we come back, as we analyze, mark that 100 was for October, 20 was in respect to additional deposit. Just mark them there. So then we have fuel consumed for partners. So say fuel consumed for partners, vehicle amounted, fuel consumed for partners' vehicles, partners' vehicle amounted to 90,000 during the month of November. During the month of November. During the month of November. Yes. Yes, for October. But just mark it. I've not said anything. I've just said, Aziz, I've just said mark it there. October, 100 is for October. Just mark it there because we are doing that. Mwalimu is actually coming back and explain some concept there. Then you say the next, fuel consumed for partners vehicle amounted to 90,000. For partners vehicle amounted to 90,000 during the month of October. During the month of October. What is that? During the month of November, sorry. During the month of November, sorry. During the month of November, mark that. Then you have computer purchase for business use, cost to 40 in November 2021. What is that? Just tell me what is that. Not much. What is that? Computer purchase for business for use, cost to 40 in the month of November. So then we have the next. Zawadi 𝐎𝐍𝐿 paid rent for the month of November 2021, amounting to 180 on November 5th, 2021. What is that? Paid the rent for November. That is on November 5th. What is that? That's an input altogether. That's an input. So then required, before I give you a small break, I'm coming to one by one. So transactions are stated inclusive of VAT at the rate of 16% where applicable, unless otherwise stated. What do you mean? Transactions are stated inclusive of VAT at the rate of 16% where applicable. Where applicable. Transactions are stated inclusive of VAT where applicable, unless otherwise stated. Together. So what do we use? What do we use? 16. Aziz, also mark the word partners via vehicles. Also mark the word partners via vehicle there. So then, as we go for a break, the examiner tells us altogether, compute the VAT payable by or refundable by Zawadi 𝐎𝐿 for the month of November. That is what you're coming to do. How many minutes break, Tim? You come back when you're fresh. How many minutes break? How many minutes break? We can make it 8. Somebody says 10, so we get to the middle, 8. So come back when you're fresh, then we start that together. Perfect, if you're ready. So 𝐻𝐍𝐿. I want to analyze this as we move slowly by slowly. So we start with the output VAT. Output VAT. I hope everybody's fresh. Is everybody fresh? I took a break because just to engage. So item is what we call nature of supply. Amount. We have VAT rate, and then we have the VAT together. So I start with these cells. Let's look at the first one. Look up, team. I want you to be very keen. And the concept is basically on the tax point. All of us, are we alert? Miriam, are you there? If you're there, you just give me a yes. If all of us are alert, then we. So we look at the first one. So being told that audit service to Excel supermarket, the value was 700,000. The service provision was 25th October. So what is the tax point? Our focus is November. So when you're told that the service provision was 25th and was paid, what was the tax point? The invoice was basically delivered because the service was provided in October. So for audit of Excel is not in November. Are we in agreement? So the tax point for Excel is October and not November. Give me a yes if you're together. So the service was actually offered on 25th. So I'm saying when you look at the Excel supermarket, so the tax point is basically October. But our focus is what? Is November. Are we together? Respond with a yes if you're together. Respond with a yes. So don't include Excel. So number 2 is training service to 𝐲𝐿 security. The figure is 240. The service provision date is 3rd and is not yet paid. So what is the tax point? The service was provided in October. We say whether the service was offered in November. So the tax point for 𝐲𝐿 security is November. So that is basically November. So we go to training service to 𝐲𝐿. We call it training service to 𝐲𝐿. We have the training service to 𝐲𝐿. The figure is 240. So 240. What do we use? We use what? The services are inclusive of VAT. Inclusive of VAT. So that should 16 over 116. What is the VAT on that? As is, what is the VAT? VAT is for that. So we have 33. Somebody say 33, 103. Is that the answer? Perfect, if that is the answer. So then you're being told that accountancy service to Watoto Children's Home. Watoto accounting services to Watoto Children's Home. How do we treat that? I know somebody, how do you treat that? Is it vatable or not vatable? Very fast. Vatable, that's basically vatable. We are not told that's a registered altogether. So that is accountancy. We know that accountancy services, Watoto. We have it as Watoto Children's Home. When was the service provided? That is vatable. The service was basically provided in December, but the payment was made 20. So the tax point, look up. The services to be provided in December. What did you say about tax point? When services are delivered or payments are made. So what makes it to be in November? Because the payment was actually made on 20th November. So the tax point is what? The earlier. Either when the service is delivered or when payment is made only or. So it came earlier. So the tax point is November. Is that okay, Aziz? Tax point is the earlier of the two. Whether the date that the service was done or when payment was made partly or only. So what is the tax point? So for Watoto is November. Are we in agreement, team? Match in order, perfect. So that is 600,000 It's a good question. I didn't think it was this good question. 116. And that question has not come for long. So something of the sort. This can be tested. There's a likelihood, so that just to give you a fresh perspective. So what is the value? What is the value? So what is the value? So 80, confirm. 80, 82, 759. 82, 759. So 82, 759. So then you're again told that debt collection, we are told debt collection, services to the dweller. The figure is 820, 9th November, and it was paid. So debt collection, what do you call the debt collection? Collection services. Debt collection services to Zuela computers. Debt collection services to Zuela. So why November? The services were November, that should be 820, 16 over 116. What is that? Give me that. So give me that debt collection. So the tax point is November because the services were delivered in November. So either the annual, the date when the service was delivered, or the payment was made. So that is 113, 113, 103. 113, 103. Then we have what we call strategic planning, strategic plan development. Remember Basel Rwanda. What is that? When you say Basel Rwanda, what is that? When you say Basel Rwanda, what is that? What is that? There's a word in the bracket. Basel Rwanda Limited. That's an export. That's zero rated. So we say strategic plan. We have it as strategic plan. We have it as Basel, and we understand that this is Rwanda. Basel, and this is Rwanda. Basel, that is Rwanda. So that was November. The tax point is November, 2115, and then we have 0. And I insist, when you multiply this by 0, don't put a dash. A dash would be wrong. So you have to write what? 0. Together as is. You must write a 0. If you leave a space, it's not a mark. If you put a dash, it's not a mark. Then I forgot to tell you something. Sometimes most of the students, the bad debt, I know you can find conflicting view on bad debt. And those approaches have been harmonized. I'm talking about bad debts. Are we listening? So bad debt, you can less it after getting the VAT payable, then you less bad debt relief. I'm saying some people will teach you in such a way, they'll tell you that for the bad debt, you less it after getting VAT payable or refundable. Or some people do it in the question. The whole those concepts, when you use them, it will still work. Together, team, it will still work for both cases. It will still work for both cases. The people who do not want to less it when you're doing the sales. But in both cases, I'm saying it will work. Is that noted? In both cases, it will work. Oh, perfect. In both cases, whether you see somebody teaching and is getting VAT payable, then it comes and say bad debt relief, both cases will still work. And there's no issue with it. Still get your mark. So then we move to the next. We have what we call consultancy. We have management consultancy, Shylock. 13th November, 40% was paid on 13th. So we have what we call management. We call it management. We have it consultancy, Shylock. And our students are understanding the tax point. Tax point, the earlier, either when the service was done or when payment is made, that will stand as a tax point. So the management of Shylock falls in November. Is the tax point November? Y is the tax point November for Shiloh. Give me a yes. Yes, perfect. Because the services were given in November. So that's 14, 16 over 116. So give me that. 16 over 116. Give me that 16 over 116. The earlier of either payment, if payment comes first, that is the tax point. If services, don't worry about that. 40%. Whether credit at that point, we are not told. We have not gotten to additional information. As is, we have not gotten to additional information. Not one? Yes, not. We will get to that on not one. So just give the whole figure. What happens? You get the tax for all. So that's 198. 198. What is the figure? 198, 621. 621 together. I'm getting to that additional information. Respond with a yes. So don't worry, hold it there. Hold it there. I'm getting to that additional information, number one. So that's together. Then you have what we call the financial. We call it internal control. Internal control reviewed by lemma. That was 960. The service provision is 18, and payment was done in October. What is the tax point? Is it October or November? That is for internal control for lemma Limited. For lemma Limited, Sheila, what is the tax point? We're saying the either of when service or supply was done, or when payment is done. What is the tax point for lemma? That is the financial internal control review. Is it November or October? It is October. October. I have a beautiful class. Either, which one comes first? That's what defines the tax point. So that is not included. So then you have what we call financial consultancy. The figure is 1.2. The service was done on 20th November. If the service is done on 20th November, and it's earlier than when payment was done, so the tax point is November. So we have financial consultancy. We have what we call financial consultancy. Financial consultancy, 1.2. We have it as 16 over 1. So get for me that. Get me that. Financial consultancy for W Limited. For W Limited. So 165. We have it as 165. 517. So then we can, I said the bad debts, you can get this and you less it after getting the V. But in our case, you can put the bad debt. We just put it bad debts. What is 60%? Get for me 60% of 1.4, 1,440,000. What is 60% of that of this? 60% of 1,440,000. 60% because the bad 60% times. What is 60% of that? So that should be 864. So 864K times 16 over 116. Get for me that for the budget. So that is 119. It is 119, 119, 172. So what is output, total output BT? So get for me the total output very fast. Total output BT. Get me the total output BT. Good students, get me the total output BT. Total output VAT. Get me the total output VAT. In fact, for this, we would have even used. So we have it as 473, 931, 473, and 931. 931. So everybody understood before we got to input. All of us, do we understand that? All of us, can we give a yes? If there's a question, then you can ask. All of us, are we there? Give me a yes if you're together. So then I need to get to this other end so we can get the input. We have the input VAT. So input VAT, we have items. Are we able to see that? Items, amount, the VAT rate, and then we have the VAT. Not able to see, let me adjust camera. Are you able to see that? Are you able to see that? Now that should be okay. So we move to this. So number one, you're being told that on 5th October, the 𝐻𝐻𝐂𝐔𝐒 renewed its national training license of 30 and paid a legal fee of 360 to follow up on clients who are not paying as per the agreed date. So is that VAT on the license, the training, industrial training license? Is there VAT on that? Is there VAT on the industrial training license? My good people, is there VAT on the industrial training license? Is there VAT on the industrial training? Very fast. Is there VAT? Yes, I've moved. I've said, is there VAT on industrial? I hope you've seen. Is there VAT on the industrial training license? No, we don't have VAT on the, no. There's no VAT on the industrial training. There is no VAT on the industrial training license. Together, we are saying that there's no VAT on the industrial. Is that okay, Aziz and the rest of the team? There is no VAT on that. Have you seen those licenses having VAT? We don't have that. So industrial training license, so we only have for legal. So we have what you call the legal. We have what you call the legal fees. Legal fees, we have it as 360, 16 over 116. What is that? Give me the figure. 360, what is the figure? Give me that, I'm waiting for you. You're the guys I'm waiting for. What is the figure? 49,655. 49,655. So then the next we're being told, electricity. Look up electricity. I hope I'm not, is it okay if I stand here or there's somebody checking this? I hope now it's okay. There's nobody checking that. So then you're being told that electricity paid on November 2021 was 270, out of which 100,000 was was payment for outstanding bill of 2021. So outstanding bill, the VAT was already charged in October. Are we together? 100,000, the tax point is October. Are we in agreement? So out of that 270, 100,000, which is a balance, the tax point. So we remove it from 270. Together, Sheila and Nelson Chengo, Norbert Ngetich, and the rest of the class. Yes, we less that. That's automatically we less. But you're still continuing. We're being told that Ed Shilling's 20,000 was in respect to additional deposit as demanded by the power company. Do we normally have deposits on VAT on deposits? VAT on deposits. That is the question. Is there a VAT on that deposit? Is there a VAT on that deposit? There's no VAT on that deposit. There's basically no VAT on the deposit. Have you marked if there's no VAT on the deposit? Kindly respond with a yes. Power deposit, we don't have VAT on that. On that. Together, power deposit, there's no VAT. Perfect. Others, Aziz, I've not seen you saying yes. And you're a bit quiet. And I need Miriam, are you there? Miriam, are you there? Perfect. So what is the balance? 270 minus 100 minus 20. What is the balance? 270 minus 100 minus 20. Electricity should be when you minus good people. What is the figure for the electricity when you balance that? That's 150. Thank you. So what do you have? What is the VAT on that? VAT on that. So that should be 20. You have it as 26.95. 26.95. So then we are here. So fuel consumed for partners' vehicle amounted to 90,000 during the month of November. So how do you treat that? Partners' vehicle. What is that? That's a private expense. So VAT for the private expense, do we include that? Remember, the word partner's vehicle implies that that is a private expense, but not the business expense. So we don't include it. Aziz, is that noted? Yes, so you don't include it. Sheila, you think this is 690? Here, 690. Okay, so I'm saying partners' private vehicles, the VAT on that you don't include, that's a private expense. So then we're being told that computers, we're being told that computer purchase for business use cost this in November. Is that vatable? Yes, that is vatable. So we have the computers. We have what we call the computers. So the computers gives us a figure of what you have as 240. So 240 times 16 over 116. What is the VAT on that? 240, 16 over 116. What do you have?